then I think it's the next natural evolution of capital markets.
Did you think that it was going to play out this way? Like, were we all wrong?
RWAs now are over 25 billion at the moment, which is just wild.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs. The creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins like USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at summer.fi, the home of the lazy summer protocol.
Welcome to the show, man.
Thanks for having me. Good to be here.
Good to see you, man. I'm digging that art in the background. Well, what is that? Is that an NFT by chance?
It is not an NFT, but the fact that we're calling it potentially an NFT, someone will probably like screenshot this conversation and turn it into an NFT, right? No, it's actually aerial photography. It's a beach. Those are beach umbrellas.
Oh, wow. That's super cool, man. Nice.
Yeah.
Well, welcome to the show. It's 8:30 here in Sweden. You're calling in. You're live. Nothing that you say will be used against you unless you have some really spicy takes. But
Okay.
but yeah, man, welcome on. Wanted to talk mostly about this tokenization mania that's happening today. I mean, it seems like day after day, the news wire rings with different announcements, different collaborations, and a lot of these partnerships really just bridging the gap between kind of the traditional finance world and DeFi, crypto native world. So why don't we just get started with a brief introduction of Securitize? Really, I think that getting to understand what it is that you guys do at the core level would be great. And I got a ton of fun questions for you.
Yeah, awesome. Well, it's great to be here. Appreciate the time. So, I'm Michael Sonnenshein. I'm the Chief Operating Officer here at Securitize. I've actually only been with Securitize for the past 7 months. I've been in the crypto space over the last 12 years. So been at this game for a while, seen a lot of different cycles and a lot of different themes and breakthroughs within crypto. But I do think this time it feels a little bit different, which hopefully we can talk about today.
Oh, don't say that, Michael. Don't say that.
Um, at Securitize, I really give credit to the team, our co-founder and CEO, Carlos Domingo, who's been really pushing the company over the last 7 years. For a long time was pushing this concept of tokenization. Candidly, no one really cared about it until the last probably 12 or 18 months. And so really at its core, Securitize is a technology platform. It has built the infrastructure to be able to mint real world assets. In our case, we really just focus on tokenization of securities onto public blockchains. So today we're integrated with a dozen public blockchains, everything from Arbitrum to Solana to Ethereum to Avalanche to Aptos, Inc., you name it. And we really work as a service provider for some of the largest asset issuers in the world. Folks like Apollo and BlackRock and Van Eck and Hamilton Lane, KKR, really helping them to bring traditional investment offerings from their traditional formats onto public blockchains. And so we're able to do that both with the combination of our tech infrastructure that allows us to mint these assets on public chains, as well as the fact that we have the right licensure and that we're doing this in a compliant manner. So we have a regulated broker dealer that allows us to sell authorizes us to sell tokenized securities. We have an SEC registered transfer agent, so that we're always keeping a set of shadow books and records on who owns what. And also a fund administration business. So as these investments make their way onto public blockchains, we have the right infrastructure to surround how those funds are serviced day to day. So in totality, it is really a vertically integrated offering for top tier issuers looking to bring investments on chain.
Beautiful. I think it's gonna be super helpful to understand a bit of like the, why now question before getting into some of the nitty-gritty. And so you guys have just been recognized for being the first to tokenize 5 different RWAs with over $100 million in AUM each. So congratulations. I'm curious from your perspective what the top factors that are driving traditional finance titans to embrace tokenization now. And kind of what are these new capabilities? What are these new reasons that have recently emerged that aren't possible in with legacy assets or weren't possible in the past? Just like why now?
Yeah, so I would start by saying it's not really hype. I think where we are today is really history in the making. There is always this impatience around crypto. Like, why not faster? Like, why aren't things, happening faster? Why am I still not buying a cup of coffee with Bitcoin? All those kinds of things. But I think really what's different about where we are now is just the numbers speak for themselves, and I think who's involved only gives that greater tailwinds and validity to the staying power, not of just the asset class, but this subset of the asset class. So when you look at the RWA market, even just the last 6 months, it's like doubled in size almost, right? Like you've gone, RWAs now are over 25 billion at the moment, which is just wild. And when you look at previous cycles or previous breakthroughs within the crypto space, there was a lot more, I think, embedded in this idea of speculation, adopting technology early, things like that. And eventually, more of those institutional investors and institutional capital came in. Now, when we look at who's getting involved in the RWA space, it's the largest asset issuers in the world. It's BlackRock, it's Apollo, it's folks like that. And so I think that lends a certain credibility and validity to what we're seeing. And it's also not just kind of experimentation, right? We're actually seeing real infrastructure being built, and the real deployment of assets on chain in a way that is far outstripping, far outshining their traditional counterparts. And that's really why I think it's so different.
Yeah, yeah. I mean, between and on like I think there's actually a deeper driver with regard specifically on the economic side, which is actually ironically the higher interest rates has led to so much more demand for T-bills and US treasuries. And then stable coins obviously have kind of grown into this mega behemoth idea that is so easy to understand for the non-crypto folk. That is, you can really just democratize access to not only just US dollars but US dollar denominated yields globally, right? And so I think while I think the rest of the crypto markets are screaming for rate cuts, and even I think Trump is himself, I think that a larger part of this entire sector, and frankly, a reason why I think a lot of people like wrote off their interest in it, because it was just, oh, it's just T-bills. Oh yeah, they're tokenizing T-bills, great. But that kind of allowed the foundation to really be built. Uh, around, okay, we can actually bring this real financial product on chain that has a real use case, real yield. And that I think, maybe you see it differently, but I feel like that was the foundation in my mind of this entire like concept of RWAs tokenization. Obviously now it's quite a bit bigger. But I think that part also played a big role in, like, without the kind of broader macroeconomic reality of higher rates, maybe this space would have started in a completely different way. Yeah.
That's certainly possible. And I think to your exact point, stable coins have seen explosive growth. They're continuing to, expand rapidly, just even as we're speaking here today. They're certainly reshaping and recasting the way that people think about value, moving value on chain. And there's no question that they have become the common denominator across the crypto ecosystem, right? Whether it's for trading, for moving value, for derivatives, whatever it is that you're doing, stable coins are kind of showing up everywhere. What's interesting about where the RWA cycle is in general, though, is that things like tokenized treasuries are starting to challenge the stablecoin model, right? And I think the on-chain investor is starting to rethink what they should be using to collateralize their on-chain activities, given the yields and the high-quality assets that are available to them, and things like tokenized treasuries and even some of the other yield-bearing assets that we're starting to see coming out of the tokenization space. So it is definitely a pivotal time for all of this.
Yeah. One other kind of thought with regards to how this has played out is, and I think a misconception of a lot of Ethereum believers early on was that all the RWAs are just going to be living on Ethereum. It's the most secure, censorship resistant network. It's where everyone's going to want to be. What we've actually seen is one, it appears to be more of a a lack of a preference for general purpose chains, let's call it Avalanche, Solana, Ethereum, Aptos, etc. And then also actually a desire for more of specialized and like custom, chain developments. Converge with Athena, Plasma, and Stable, those kind of like Tether
Yep.
chains, Robinhood chain. How like did you think that it was going to play out this way? Like, were we all wrong thinking that it was just going to be on Ethereum? Like, looking back, like, how did, like, is this what you thought would happen? And maybe we can then make a more kind of forward-looking thought as to where these things will live in the future.
Yeah, well, it's a great point. I mean, at Securitize, we're certainly, chain agnostic. We're integrated with a dozen public blockchains. So everything from, like I shared, Ethereum to Arbitrum to Avalanche to Solana, you name it. There has definitely been, I'd say, probably the predominant amount of RWAs minted on EVM chains, but you are starting to see more movement into, you know, things like Solana and, some other parts of the crypto ecosystem. And I think that's a function of the fact that each of these chains and their associated entities and ecosystems and enthusiasts, they all have these installed bases of participants and investors and people that are looking to engage on those protocols in new ways, right? So if you're someone who's a Solana enthusiast, yeah, sure, maybe you are speculating on the price of Solana. Maybe you're actively staking Solana. Maybe you're doing all these other things. But now the fact that there are these on-chain investment opportunities for you to participate in on Solana creates yet another use case, another utility that maybe wasn't there before. And so when we think about each of these as sub ecosystems, you can see why, we at Securitize are minting assets across so many different blockchains, and then also working with great partners like Wormhole to facilitate interoperability across each of these ecosystems. And I think one of the other things that we're also doing, which is exciting, is also working on building another blockchain. We're working with the team at Athena to launch Converge, which will be a new blockchain that's really, we hope, going to be like a settlement layer, a sub, kind of common denominator as we think about these really high quality RWAs and how they live and interact with the world of DeFi, which for a lot of the on-chain investors is really where they want to take their RWAs to get that much more value out of them, that much more utility out of them. So I think it's too early to make a call. And I think that we will continue to see rapid RWA development across a lot of different chains, a lot of different ecosystems.
Yeah. Yeah. I mean, I think Converge is a perfect example of a thesis that we've held at the Rollup for a while, which is around, um, you know, originally it was kind of application specific chains, but I really kind of view it as like, okay, you have these purpose built environments specific for specific reasons and for a specific use case, and then also for a niche market segment. So it's kind of like these niche purpose built chains are where I think a lot of the space is going to head. And it just happens to be that Converge, accurately fits into this. So let's go a bit deeper on Converge. As you guys as you mentioned, Securitize is one of the largest, if not the largest, RWA issuer on Ethereum, right? If you don't count stablecoins, now partnering with Athena's USDE, which is the top 3 stablecoin, top 4 stablecoin in the world. How do you view this kind of partnership, joint venture, this launch of this chain to further cement Ethereum and Converge as the go-to platform for institutional and traditional finance? How do you really plan to make that a reality?
Yeah, so I think it really comes down to the partnerships and the ecosystem that, we and the Athena team are building around Converge. So for one, on the securitized side, we're certainly hoping to bring many of the top tier asset issuers that we already work with to the Converge ecosystem so that they can bring their products, to new users and new use cases and new utility. Certainly with Athena, a lot of their partners across the DeFi ecosystem, I think really can help enhance what that looks like. And so as we want to move towards launching Converge, hopefully, in Q3, it's not just about the infrastructure or the issuers, but it's a lot of the application partners. So we've already, announced folks like Maple and Morpho and Pendle and Terminal and Strata. And so from the get-go, for us, it's really about having these types of partnerships, this types of, functionality in place as the RWAs make their way into the Converge ecosystem, and then also making sure that we have the appropriate developer tools so that Converge can really serve as that layer for where a lot of these applications come together or converge.
Well, Michael, it's crypto week in America, man.
It is. It is.
Yeah, I don't know if you saw that Trump tweet, but he's pretty hard pressed on getting this Genius Act through, and then also this Clarity Act as well. Very bullish Ethereum on my side as a result of this. Extremely bullish on these kind of legal tender stablecoin esque products as well. I mean, let's say end of week we get Genius Act passed, we get Clarity Act through. What does this do for the tokenization RWA sector? What kind of confidence does this instill? And what does this do for crypto in America as a whole from your perspective?
Yeah, I mean, you're talking to someone that has spent many years, lobbying on Capitol Hill, multiple very deep engagements with the SEC, CFTC, Treasury, you name it. So the environment that we find ourselves in today here in the US, really with this desire to cement the US as the crypto capital of the world, to have, bipartisan supported legislation passing through Congress, the types of task forces and requests for information and things like that coming out of our regulators and legislators. I mean, this is the type of stuff that an industry, which arguably is still a cottage industry, just tiny compared to all the other industries that our regulators and legislators are responsible for. I mean, these are the types of things that we could only dream of, right? And I think the stakes are probably higher than ever. And I say that because also having somewhat of a global view of crypto, just being in the space over the last decade, it is always, and at the moment remains, the US that so many other jurisdictions look to for guidance. And so how policies get set up, how um, different pieces of legislation are enacted here in the US definitely is going to have a ripple effect, no pun intended, to other jurisdictions all around the world. So I think this time it does feel different. And the stakes have probably never been higher as to the implications for crypto in general.
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yield on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet.
Yes, so it's very important that we get this right, which I think why there's a lot of DeFi leaders, going to the White House, going to these meetings, doing their as much as they can to properly lobby in the last even just 6 to 8 months, specifically with this Genius Act, because I think originally there was quite a bit of nuance missing from the actual act, and I think that over time it got to a point where I think a lot of the stablecoin issuers and people that were quite in the know of the matter felt very, very comfortable and strong about this. And so I think the second order effect is going to be we're about to see a lot more stablecoins launched, like
We are.
very quickly.
Yeah, and listen, I think there's a lot of, there are some pole position stable coins like USDC and Tether and things of that nature. And so with this new framework in place and, it's very easy to understand, you're going to run a stablecoin you here in the US and offer it to US investors, things like that. You need to put it in transparent reserves that are registered funds, direct treasuries, short dated repo, things of that nature. And all the new issuers that are up and coming probably just kind of feel like they had everything to gain and nothing to lose, right?
Yeah.
And not only do we kind of see this new framework having emerged that I think can spur a lot more activity and a lot more issuers coming, but I also think it says a lot for kind of businesses like Securitize, right? Like today, the fund that we worked on and continue to service for BlackRock, the Biddle Fund, that serves as a reserve asset for a lot of stable coins, right?
Yeah.
And so I think those that are looking at tokenization in general, they're going to see increasingly, not just with stable coins, but tokenized treasuries. There's just so much more functionality on chain that just traditional rails don't allow for. And in the ever increasingly scrutinized world of atomic subscriptions and access to capital 24/7, it just further necessitates, or it's almost like a shining advertisement or endorsement, that this concept of tokenization of securities and the utility and features that it offers, these are just irrefutable. And this is the direction that banks are going to go in as they launch their own stable coins. Other payment businesses are going to go in, and probably other crypto native stable coin issuers as well.
So, Michael, with that kind of lens of thought and kind of thought process here, what is the part of this entire sector per se that, as a result of new stablecoin issuers, new stablecoins, and just this continuous growth, like, is there a part of the sector which you can point to specifically as to, like, this is something that people should be watching in the next year more than other parts, or that, hey, like, stablecoins are very exciting and there's going to be a lot more of them, and tokenized treasuries are great, but, like, really, there's a lot happening here that I don't think is getting enough love. Is there anything that
Yeah.
comes to mind specifically in this sector?
Yeah, I mean, stable coins and tokenized treasuries, Genius Act, these are all very important topics. A topic that arguably is actually getting more airtime, and I think it deserves our airtime as well now, is to talk about the tokenization of equities, right? And that's, seemingly this next big foray into expanding the RWA market and the assets that, we believe are going to be going on chain next. You've seen a variety of announcements from companies believing that they've kind of cracked the model to be able to bring equities on chain. And you have this overall convergence between wealth that's been accumulated in wallets and wealth that's been accumulated in brokerage accounts. And you're starting to see user behavior want those two pools of wealth to converge, so that they have one user interface, one pile of assets that they can really leverage for their investment strategies. And so I think the next natural extension of where we are is the tokenization of equities. I'd say broadly, two major schools of thought have emerged, and I believe and happy to talk about what Securitize is doing here. But those two schools of thought are really one, wrapping securities. And so you have a lot of folks that are working to create special purpose vehicles or wrappers where the tokenized interest is in that wrapper itself before the user has actually any recourse or legal rights or obligations to the underlying equity that it owns.
Yeah.
Um, we think that that's a problematic strategy. It doesn't really demonstrate for the users a real ownership. Instead, it's really more like synthetic representation. And I think the SEC has even recently commented, Hester Peirce last week put out some commentary on exactly this, that these kind of receipts for securities, don't really allow issuers or investors to enjoy the protections that, US securities have. We at Securitize, on the other hand, have taken a much more digitally native approach. So because we have the infrastructure surrounding our broker dealer, our transfer agent, and DTC connectivity, we're actually able to facilitate the movement of shares of a security that someone owns regular way back through the DTC system, and thus able to mint the asset back to the user in their wallet so that they enjoy the exact same rights and ownership and governance and distributions and everything that they would normally be experiencing in a traditional environment. And so at the moment, these two schools of thought are out there. Ultimately, I think something is going to come to a head around this. Um, I think regulators are watching this closely. I think that a lot of this activity, certainly around synthetic and kind of wrappers of equities, are happening more offshore. But certainly, as soon as some of that activity comes back into the US market and into the wallets of US known investors, I think it is going to be problematic. And I do think this is something everyone should be paying attention to and everyone should be watching.
Yeah, I mean, it sounds quite similar to, owning Bitcoin on the Bitcoin blockchain in a ledger versus owning wrapped Bitcoin on Ethereum, for example, right? I mean, it's different, but from a very crypto native lens, there are going to be investors who are okay with that, and there's going to be investors who seemingly like not going to want that.
I think that's right. But I think
Yeah.
it extends beyond that. Like that's
Mm.
certainly a crypto native
Yeah.
analogy that we can sink our teeth into. But, if you really are thinking about this happening in size and institutions coming to, want to trade equities 24/7, 365, they're going to care quite a bit about the tax treatment, the
Mm.
governance rights, the ability to have voting rights on the equities that they own. And a lot of that stuff won't be able to be extrapolated or make its way into the way that that's done for these synthetic or wrap securities. And I think certainly from a regulator perspective, I don't see how it would be possible to instill the protections around insider trading and order protection and all the kinds of things and disclosure that certainly our regulators want to ensure that investors have when they are making these types of investments.
Yep. Yep. Totally get it. So I mean, I am, it is going to be fun to watch these two kind of schools of thought play out. It's good to hear that Securitize is very much thinking about this from a, again, it's not necessarily like the crypto ethos per se, but it's just this ownership, that is valuable. And then all of these different, kind of aspects that institutions will want, that you just, kind of put out there, I think will also fall into line there. So I agree broadly as well. Tokenized equities. I also think like extrapolating that to the next extreme is like, let's put, instead of I don't think Stripe's ever gonna go public, but like instead of instead of your favorite app on your phone that's kind of small but kind of big, that could do an IPO potentially. No. Why don't we think about a way to do some sort of like on-chain IPO or some sort of like tokenized version of these ownerships? And I think that could also happen, but very, obviously we're still in, step one here of just getting tokenized equities on chain. But that's something that I'm excited about too.
Yeah, listen, and I think what you just said is coming, right? On-chain IPOs, on-chain secondaries. I mean,
Yep.
there's no reason that issuers should not be able to tap directly into this, installed base of investors who are looking for these types of opportunities. And I think it's the next natural evolution of capital markets. In fact, we and some others actually think that over time, as the tokenization of stocks, continues to pervade, this actually might be the next evolution of ETFs, right? Today, we've seen and continue to see day after day more and more mutual funds shutting down and swapping into ETF format. That's been a decade plus, kind of process. And perhaps over the next, however many years, we see a similar, kind of movement and user behavior away from ETFs into, tokenized securities that can serve with those same types of exposures.
Yep. Yep. Very, very interesting. Last thing for you, Michael, that I have is, so you worked at Grayscale for quite a while. I just have a couple questions about that. First of all, um, where were you when Barry Silbert tweeted, "It's going to be a big week," and then that became one of the biggest memes in crypto?
I don't know if I remember where I physically was. But that's my time at Grayscale, 10.5 years is the time period I look back on really fondly.
Yeah.
A lot of wins, a lot of successes, a lot of lessons learned, a lot of great people along the way. And probably a lot of big weeks if I really think back.
So you guys grew this to, I mean, a multi-billion dollar kind of entity, with, everything from the ETF products to the kind of like tokenized, or basically funds for different tokens, et cetera. What are some of the lessons that you carried over in particular, or at least just what are some of the things that you personally, overcame, wanted, and have since kind of grown skills as a result of your time there that you're carrying over to Securitize? If you could pinpoint a couple things that
Yeah,
that
a
you,
bunch
yeah, yeah,
bunch of things come to mind. So I think first and foremost, when I joined Grayscale essentially as employee number one, I remember when we were 2 people, 5 people, 10 people, 100 people, right? And
yeah,
so over time, as the business grew and scaled, it was so important for me and everyone around me to learn delegation. As the company became more complex, our processes became more complex. The ability to delegate and lean on team members was just something I and everyone had to learn. And certainly something that I'm taking with me as I, now am in this role at Securitize, overseeing a whole bunch of different parts of the organization. I think too, culture is so key. At Grayscale and certainly at Securitize, we want people to, show up as their authentic selves, do their best work. And because we are not a bank, because we are not an institution that has, the rigidity of so many different, levels of approval and committees, and we want to, move fast and sometimes break things.
totally.
When you create an environment for people to just be who they are, and do their best work, not be afraid to take risks, ask questions, question the status quo. I always felt and seem to continue to feel that you actually get the best output out of employees. And I think the third thing, and this is not just a Grayscale thing I learned, and certainly not just something I'm carrying with me at Securitize, but is just generally knowledge that I take with me. The best companies, they hire people, they don't hire resumes. I think when you are building a team, building an organization, sometimes the 0 to 1 people are not necessarily the 1 to 2 people. And it's not just what's right for the company, but also what's right for the individual themselves as they think about their career path. So I always encourage people to, always look at things with a fresh perspective and make sure that they're not kind of stifling their own growth or the growth of the business they're a part of as well.
Well said. $25 billion market cap for RWAs today, about 243 or $245 million in stablecoin supply. I'm expecting good 8x on stablecoins by the end of next year. You can tell me where RWAs are going. I appreciate you coming on, Michael. Thanks for joining, man.
Thank you. It's great to be here.
Cheers, man. Speak to you soon.